Folks, I'm recording this from Paris, France, and I am at a cafe, so you're going to have to forgive me for any background noise. It's a really beautiful place. I am at Le Café Pensée. I am finishing off baguette with butter, a little bit of jam, very, very good. This is my second helping. Originally I had a croissant, and they don't have regular American coffee here. They have, you drink espresso. So my second double espresso, I am junked up, ready to go, finishing off my second one. And what we're going to talk about today is the markets to a certain extent. I don't have much bandwidth here. I'm working off of my hotspot at the cafe. And I think the story last week was the strength of the U.S. dollar. There's a tale of two woes out there. Woe number one is that we have a debt ceiling debate. The last I checked, at current, the time here is 11:51 a.m. The time by you on the East Coast anyway is 5:51 a.m. So the beginning of the news cycle on a Sunday, Mother's Day. I don't expect much for the next 12 hours with regard to the debt ceiling debate. But it is going to become an issue. It is an issue. And I think you saw it last week in the bond market with yields moving up higher. This week is going to be interesting to see whether or not the gold markets can withstand something that was strange last week, and that was a rise in the U.S. dollar. So the dollar played a big role, and I've been warning about this for about 3 weeks, the strength of the U.S. dollar weekly time frame. And I'm going to share my screen. Hopefully these charts have updated. Again, the Wi-Fi here, oh yeah, they did update, good. The Wi-Fi here is a little bit wonky, a little bit slower, and you could see that on a weekly time frame last week, the dollar surged. And I've been warning about this. About 3 weeks ago, we lightened up on our silver position and our gold mining position. Still have our gold, but a major move in the U.S. dollar. And I've been warning, if you get this, and it looks like there is more higher highs to go. If you get this, a breakout in RSI, higher lows on higher lows on stochastics, and a higher high on price, well, you're probably going to get higher highs moving forward. That's simply the trend. So despite all the chatter about de-dollarization, it's all you heard about is de-dollarization. Sorry about that, I had a phone call come through. So this is a problem for the emerging markets and for the precious metal markets. Let me get this out of the way. I'm working with one monitor. Okay, so you can see that gold dropped down a 0.25 percentage point last week. It didn't break support. So gold is certainly not broken per se, but on a very short-term time frame, I wouldn't be a buyer yet here. I think we're going to get better opportunities in the future. And here's your daily view as we bounce off of support. Now, the reason why I'm not bullish on gold right now is due to the fact that you have the dollar rising again, and you have yields rising, which the gold can move higher with yields. Don't let people talk you out of that. It's when yields and the dollar move higher that gold has a major problem moving up higher. So we're at support, which is fine, but momentum is waning, is measured by stochastic, is measured by RSI. That's no bueno. That's no good. Volume rose last week. So while we bounced here, and this may hold for all I know, but right now I'm a little bit bearish on the U.S. dollar, a little bit bearish on gold until such time as the U.S. dollar finds a peak, finds a top. And again, going back to what I was saying before my phone rang, all the conversation with regard to de-dollarization, everybody was talking about it. They're still talking about it. You know what that means is that the dollar's going to strengthen. Simple as that. That's the contrarian attitude that we have. So, don't let them take parking space up in your head. It's going to be a long time before the brick currency or the yuan or whatever they're going to sell as the next currency before it ever has the trust of the global system. Nothing has the depth in the system as what the U.S. dollar does at this point in time, not even the euro. So, moving on to the equity markets, we take a look at the VIX, which was actually down last week, if you could believe that. The VIX was down, even though equities lightened up on the week. So, what that tells you is that while there was some selling in the equity markets, there wasn't a lot of insurance buying on the VIX. So, am I overly nervous about a down week this coming week? Not necessarily. The markets definitely did have a shaky week. Friday was a one-sided market, meaning there was nothing but selling per se. And so the VIX is still relatively weak. Now, moving on to the Dow transports, here's where things get a little bit wonky for the equity markets. I always like to say that the transports are your canary in the coal mine for the equity markets. And last week, we broke down below not one support level, but two support levels here as referenced in this horizontal green and red line and the blue line. So a clear breakdown on the Dow transports on a weekly time frame, and that's a forward-looking indicator of where we might be heading. And here's a daily view where we bounced off of support on Friday. Not a horrible day. We did see a little bit of buying coming in, and volume was pretty light. So perhaps they'll rally this. Could get a 100, 200 point rally on the Dow transports, but ultimately I think that we're going to fade here. Now, looking at the Qs, the Qs on the week finished out the week net up on the week relative to the S&P 500, which was down on the week. So you're still seeing the Qs as a leadership group. The one problem for the Qs, and I'll go to it in a moment, is the 4-hour chart. And I spoke about this with members for a while last week. But Qs up, and on the day, you could see that we were rejected at resistance. And I kind of anticipated this. We have a short position on the CMG, Chipotle Mexican Grill. We added to that last week. We did a little bit of shorting early on in the week. I didn't add to the short trade because I was traveling. I couldn't really monitor it all that well. But if we do see a new lower low here, I may just add to the short trade of the Qs. Now, the reason why I'm becoming a little bit more bearish on the Qs is that when you take a look at the 4-hour chart, we broke support on Friday in the morning. We managed by the end of business on Friday to rally back and recapture one of those support levels. So are the Qs dead? No, they're not dead. They are putting up a fight here. They did manage to eke out a gain on the week, so on a relative basis, they're outperforming the rest of the market. VIX did not close up yet again. Let's keep that in the back of our mind. So not a lot of insurance buying on the part of traders. So net on the week, I am not overly bearish. I am getting more and more bearish as we see stalling action on the triple Qs. Again, leadership group and a breakdown on the Dow transports, a leading economic indicator for at least the equity markets. So with that, au revoir from Paris. And despite what the public opinion is in America, the waiters here are not rude. They are, you come to the restaurant saying bonjour, at least put up an effort to try to speak the language. They're very, very nice. That's my feedback. So, if you can get to Paris, come to Paris. People are actually very, very nice, but you need to just try to fit in with them, and they embrace you. So with that, au revoir, and I'll talk to you soon. Be well.